Hey, good morning, everybody. Back in Sebring now. Had a great week last week, getting some practice development, continuing education, meeting with my mastermind group. It's kind of neat. We had probably 16, 17 of us in a room. We figured there's about $1.6 billion there in assets between all of us, over 300 years of experience. So a great thing, great time we had there, learning from each other. Always good to be able to do that with folks. So, and we meet a couple times a year. But hey, last week was a tumultuous week, right? So the markets were down significantly. Dave and I will have that conversation in a little bit. I do have some year-to-date numbers and some all-time high numbers to see kind of where we are. But what's more important than that is, where are you at? What does your portfolio look like? How are you being affected? And are you in that retirement danger zone, 10 years out from retirement? You know, I was talking to somebody this weekend, and they were really concerned because they can remember what 2008 was like, and they can't afford to have that kind of loss again, getting where they're 4 years out from retirement. If that's you, you need to give us a call, and let's go through our financial x-ray. 863-382-0037. Hey, I'm looking forward to my conversation today with Dave, and he'll be with us here in just a moment.
Hello, at 8:39. That's 21 before 9. Time to check in on your money and our daily epidemiology update. Unfortunately, it's starting to sound like that at times. How's Wall Street treating your money this morning? Well, let's go downtown, find out about it. Statler Financial Services in downtown Sebring, in the offices of Phillip Statler, who's here on the line with us. Phillip, good morning. How are you?
Good morning, Dave. Hey, I'm doing well today, back in Sebring, and so had a good week last week with some continuing education and some development, and just meeting with a lot of guys that know a lot of stuff. So it was a good couple days.
I'm really glad to know, and it's good to have you back in town too. For God's sake, don't cough, or you're going to clear the entire room these days, right?
I tell you, this coronavirus is just, man, it is causing havoc.
Oh, gosh, yes. Just to update everybody, if you hadn't heard the news, we now have 2 cases of coronavirus presumed. They don't have the final results from the tests in. One up in Hillsborough County that they were able to trace back from having been over in Italy. The other one, they haven't traced back the origin yet, over in Bradenton, so it's in our state now at the very least. And I was telling you before we went on the air, I'm absolutely amazed. We're panicking way to the maximum on this. I mean, staying vigilant is one thing, but we'd already bought the whole dang town out of surgical masks and hand sanitizer before Sunday morning, and that was before the news that the virus apparently was in our state already. People, calm down. Be vigilant. Don't be fools. Don't scare the room off.
Dave, think of this. This was brought up Friday at my mastermind group. You know, last year, 2019, the flu caused the death of between 180 and 190 children under the age of 10. And we heard absolutely nothing about it. It didn't affect our markets one bit. Now, all of a sudden, we are looking at the coronavirus, and we're here in the United States, and maybe we have 2 deaths. And it's just being an amazing thing to our markets, just killing them. People need to be think prudently, right? And let's don't rush to some unrealistic expectations here.
And at the same time, with the political season being what it is, hey, here's a hot button that the politicians can argue about. The Democrats fire, Trump fires back, and it just ratchets up the panic even more. I did something on Friday while you were gone. I went back and looked at the swine flu panic that we had back 10 years ago. We killed 12,600 people in this country on the swine flu, and we responded in an orderly fashion. We got the virus done. We got a little surprised by it then too, if folks remember. They got a vaccine out, and we contained it as best we could. And yes, we lost 12,600 people, but it wasn't as much of a panic as we're having right now over the H1N, over the I can't remember the name, over the coronavirus. I can't remember the clinical term for it. Yes, being vigilant, being cautious, and not being stupid is important, but the panic is way overblown for what the situation in reality is, especially on these shores.
Yeah, I think so. If we look at, some of the numbers that I was kind of looking back, right, to see, okay, I knew that you were on your own Friday, and so maybe you didn't get to all the numbers, and a lot of them probably came out actually after you were on the radio. But I was looking at things like personal income, right, was 100% better than expected last quarter. So, I mean, it was up from 0.3 to 0.6. So, inflation's doing what it's supposed to do. Personal spending was down a little bit. But the look at the numbers from an economic standpoint, and you really can't complain.
No. I mean, economically, we're looking all right. I had the personal income numbers. I didn't have what the market expectation was. I'm glad it was a good surprise. We haven't had a bad economic number now in well over a week of any great size. But nevertheless, in 7 trading sessions, Wall Street has lost $4.3 trillion in valuation off of the panic over a virus that you mentioned kids from the flu last year. Word is the coronavirus that's currently making the rounds is supposedly not really affecting kids. It's the elderly and those with compromised immune systems that seem to be the most affected. We're panicking and we're losing equity like nobody's business over something that certainly deserves attention, but certainly doesn't deserve to. We're not all going to die, is the simple way of putting it.
Exactly. So let's look at what those numbers really are, Dave. So I looked at the year-to-date numbers through Friday. The Dow's down 10.96%. The S&P 500 year-to-date is down 8.5%. Now, granted, sometime between the first of the year and now, we hit some all-time highs. So I went back and looked at that number, right? So from the high, the Dow is down 14%, and the S&P 500 is down a little short of 13%. More than the 10% correction, but not the 20% bear market number yet, though. We'll get to it in a minute. We are looking pretty red this morning as we get ready to start the day.
Yeah, and I was saying on Friday, we kind of slammed through the 10% number on Thursday and went down a little bit farther on Friday. The question now becomes, are we actually going to scare ourselves into a bear market off of this? And this is something you and I have talked about for a long time. Nobody likes a bear market, but the rhythms of the markets as they go, eventually one is inevitable. It would be kind of tragic if what we hope is going to be a false alarm. We always say we hope, but it'd be kind of tragic if what we hope is a false alarm ends up triggering a bear market, wouldn't it?
Well, that's true. But here's the main thing I think people need to be looking at is where are you at in the retirement zone, right? Are you in that danger zone where you're 10 years out from retirement? That to me is the crucial point. I was meeting with some folks this weekend and they were like, they remembered 08, and they lost a lot of money in 08. And so they're now 40 years away from retirement, and they're very concerned about their portfolio, making sure that they don't have too much risk because they can't afford that down cycle. They can't afford that 30-40% loss like they incurred in 2008 this close to retirement. And if folks don't know how much risk they've got, that to me is where there could be some issues.
You talk about that 10-year danger zone either side of retirement, which is very, very true. In 08, 09, my IRA just absolutely tanked. It went down by like 70%. On the other hand, I was like 15, 17 years away from retirement. I let it ride, and now it's healthy again. It's perfectly fine. It came back. I'm now looking at the notion of being a single-digit number of years away from retirement, and hedging my bets was a good idea. That 10-year window is a really important one, isn't it?
It really is, especially as you get closer and closer to that retirement age. It takes a long time to recover from both the two bear markets we've had in the last 20 years. 2000 to 2003, it took somewhere around, 4 to 6 years, depending upon how you were invested, just to get back to even if you left your portfolio to do what it was supposed to do.
And once again, it comes to the point if you're a young'un, letting it ride is probably a good idea. If you're a young'un, putting more money in while things are far down is a good idea. But if you're getting anywhere close to retirement within 10 years, as you said, 6 odd years just to get back to plain zero, it's not a comfortable place to be. And obviously things are not a comfortable place to be at the moment, are they?
No, they're really not. And so, we'll see what happens today. But, one of the things that caught my eye again is we've been watching that 10-year Treasury. Now, I think it's up a little bit from where it was, but it got as low as 1.04% overnight. Now, right now, I think it's about 1.07% is the yield.
That's what I'm looking at now, and I'm looking at 1.63 on the 30-year notes, which is just mind-bogglingly low, isn't it?
Yeah, it really is, Dave. That's just, I mean, I can't remember ever seeing anything like this before.
Absolutely. Off of the subject of the coronavirus and the market panic and whatnot, we need to put a rest in peace note out because an absolute legend in the realm of corporate management passed away. We saw that come over our news ticker just a few minutes ago, so we're even getting ahead of the network news on this one. Jack Welch passed on.
Yeah, he did. For those that don't remember, he was the CEO of General Electric for quite some time. Wrote a book, and it was well received, at least in the Wall Street and business community. And so, he was kind of an icon during his time there at GE. He was 84 years old, and so it's one of the business icons has passed away today.
Absolutely, he was, and in GE legend, he was the king of GE, while GE was a kingpin on the market as well, and they haven't been in quite some time now. Setting the table for the morning, we pretty much have told you where things are going. Back it up to Friday. Dow dropped 1.33% on Friday, down 357 points. The S&P was down 0.82%, down over 24. NASDAQ kind of bucked the trend, but not by very darn much. They were down by 0.8 point up. It was green ink, but not very darned green. We had overnight the word from both the European Central Bank, the Chinese Central Bank, and our central bankers that they'll do what they need in order to prop up the markets. They gave us a nice boost on the futures, but then the new news over the coronavirus lost one more on the West Coast yesterday, and we have 2 new cases that have popped up potentially being coronavirus here in Florida, and things turned right back south again, 45 minutes early. How bad does it look this morning, Phillip?
Yeah, we are definitely in green ink, but it has bounced all over the place. I mean, when I got this morning, we were up 250 points. Then we were down as much as 160. Now we're back down 170. I mean, not 170, $72 right now, not the 100, just $72, which is about a little more than 0.25% on the Dow. S&P 500 is down about 0.5%, $15, and the Nasdaq's down less than 0.2%, down 13. So everything's looking down and in the red on those indexes. If we look at the commodity side of things, we've got gold and silver heading up today, both significantly. Silver's up almost 1.5%. Gold's up 1.75%, and crude oil is coming off of a pretty low week last week, up 1.75% to $45.55 a barrel.
No, we wouldn't mind staying in that trading range. As I've said before, I just don't like the reasons why crude oil is down. World markets, the Asian Rim markets closed while we were still in that sense of euphoria over the central bank saying we'll do something. So Asian Rim markets were up at the close early this morning. Europe is currently somewhat mixed. British markets are generally flat. Germany, a little closer to Italy, is down by over 1% this morning, midway through their day. Phillip, we've been talking about the instability and the danger of being less than 10 years away from retirement during times like this. How do I find you to get some advice to insulate myself from this?
Dave, folks can give us a call at 863-382-0037, especially if you are in that retirement danger zone 10 years out from retirement, or if you just retired, you're 5 years into retirement. Man, that's the time that any misstep could be disastrous to your retirement. So give us a call for our financial X-ray, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on your sister station, News Talk 730 a.m.
which streams at newstalk730am.com and on the App Store, as do we here, and we'll be here tomorrow morning on Light FM. Phillip, thank you so much. You have a good one. We'll catch you tomorrow.
Thanks, Dave. I look forward to it.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, I want to thank you for joining us today. Remember, if you're in that retirement danger zone, please give us a call. Go through our financial x-ray. Make sure you don't have too much risk in your current portfolio. 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.